But what if you say you come in and go, look, here's what I'm going to do. I don't care about your agent. I don't care. Let me just look. I can go back 3 years, current plus 2 or 3 years. And if I get you money back, we're going to work on a shared savings agreement. Is there any reason you would tell me no to that? If I tell you, every vendor that's coming to see you, Mr. Plumber, is taking money. The Kohler guy that's you're selling, buying the toilets. Everybody's taking. Who says I'm going to audit everything and bring you money back?
Welcome to Insurance Shoptalk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry. From the latest news and trends to in-depth interviews with InsurTech experts, carriers, and agency newsmakers, we're covering it all. So sit back, tune in, and let's start the conversation. All right, everybody. Today, I'm really excited. We have Duke Mills, the president of Work Comp Solutions out of Lakeland, Florida. And Duke is got a unique concept about premium recovery in that he's an insurance agent, owns his own agency there that I believe just got attached with some private equity recently. You can talk about that. And he has basically recovered over $15 million in premiums for clients. And I think he's going to have a unique spin of how to utilize this model in addition to insurance sales as a means to get new clients. So I know everybody on the call or on the podcast loves any kind of new marketing tip that's creative, and this caught my eye. So Duke, thanks for coming on. I really appreciate it.
Yeah, sure.
And also,
can I ask you something here before we get started?
Yeah, please. Yeah.
So how do you look absolutely gorgeous? So what are you doing to your thing that either I need to put a mask on or I got to figure out how you do that. I mean, I can't adjust my filters. It's filters?
It's the filters.
Yeah, I don't think I think I'm already maxed out, and this is about as good as it gets on my filter. So anyway, sorry, let's go ahead and get started.
No, it's the filters and the lighting, man. It's filters and the lighting. I appreciate that.
Okay, yeah.
But I'm also excited, Duke. I know we talked about it to let everybody know about if they don't already, have not been on one of the podcasts, that I just released a new book on Amazon. It's called The Blueprint. Yeah, an insurance agency's unconventional rise to the top. And it's the story of how I built my agency, Insured Solutions, and utilized offshore, nearshore talent, digital marketing, and created my own high deductible workers' comp program and all the trials and tribulations through that. And it's a blueprint in that the first half of the book is more of the journey I had to go through to kind of get things going. And then the second half of the book is truly a blueprint in that I get very specific in all the areas I mentioned on how to do it. And it's really geared to agents and CSRs. So if you guys haven't picked up a copy, please do so on Amazon. It's in Kindle and soft and hardback versions. And I'd appreciate it. You can just kind of get the word out about, who we are and what we're doing, and hopefully be a good guidebook. But back to you, Duke. Why don't you go into a little bit about your background and how you got started in insurance and the premium recovery as well?
Yeah. Well, before I do that, I want to say congratulations on your book, because I think guys like you you got the blueprint, but you failed way more times than you were successful.
And I do put the failures in there, by the way. It's not all
right. I know you. Yeah, I know you did. And so I think it's important for people to see, but you got to keep getting up every day and you got to keep swinging. You got to be Ted Williams, man, of the Boston Red Sox. You don't bat .399 for 400 for several years in a row without failing way more times than you succeed. So, but anyway, so I'll give it to you really quick because we're going to talk about premium recovery. And so how all of it started, right? So when I first got into the insurance business a long time ago, I worked for an agency, and it was a full lines agency, right? So it was back in the late 80s. So you sold, P&C business. I could sell pet insurance, right? Health insurance, but you didn't want me, quite honestly, But so workers' comp at the time when I'm starting to write business, the rates in Florida were going up like 20%, 25% a year. So when I would go into my clients doing the renewals, they would just literally go, you can take the keys to the company. We can't afford a 25% rate increase.
Right.
For those of you who are, if you were around back then, and I can tell you, if anybody's from Florida, you were around back then, I can tell you that the roofing rate was almost $60, 100. The steel erection code for under 2 stories was $99 per 100. So these rates, right? Painters were $36.
Yeah, now roofing, what, $9 or something? I heard, like, cheap.
Roofing is now $8 and change.
God, I can't believe
and
that.
So
seen that.
I know. Well, yeah, I know. Well, this is going to segue into kind of where I started, then I shifted, and how I went back to premium recovery. So when I would go into these businesses, and they say, you might as well take the keys if workers' comp's going up. And they would ask me, Duke, are there any mistakes on my workers' comp? So if you did a personality profile on me, if you use the DISC, that's the D, the I, the S, and the C. Most people are aware of it. I'm a high D, a high I. I'm dominant driver, innovative, idea guy, those that D, and I peg out on both those. Analytical, attention to detail. I haven't balanced a checkbook in 30 years. I have no idea, right? Caregiver, not so much. But I'm a high. So when my clients would say, can you look at this stuff? Can you make sure my work comp is right? Now, I can adjust, right? I mean, you can give me a calculus problem and eventually I'm going to figure it out, right? I'm going to be dogged at it. So as I start looking for these mistakes on the workers' comp to see if I can get their premium any lower, I'm finding classifications, experience mods. We have something called, and I'll talk about it later, the aggravated inequity rule. I'm finding all of these mistakes. And what the majority of people don't know, not only can I fix them, but I can go back 2 years and get their money back. So it's not only the current year I can fix, I can go back. And the reason you can go back, because if you look at a work comp contract, policy contract, it says the carrier can go back 2 years. So that just made it fair and balanced. So when I started going back and I started fixing this stuff, I wasn't doing premium recovery. So this is, like I said, this is back, I was making $500 a week on a draw. So I was going in the hole every week that I took a paycheck. So now what I did is my competition, I would now, and this is what most even agents do it today. They go, if I write your liability and your inland marine and all the other lines of coverage, just give us the workers' comp on an agent of record letter for easy use, right? One place to call for a certificate. So then what I would do is I would go in and I say, if I can help you with your workers' comp and find mistakes, I want an agent of record letter on your P&C business. I flipped it. And that was not pretty, because back then the commissions were nothing. They were 6-8% for workers' comp back then. So it wasn't like a lot of money. But what it did is I'm identifying these problems and I'm getting the money back, but then I'm taking, and it was so funny that probably after 3 or 4 years in the business, Westfield named me, they call it their MVP. There were 3 people they named in Florida as MVPs, most valuable producer. I was one of them. Now, it was really because I AOR'd all this. I had a big book of Westfield business, right? But I didn't know shit. I'm telling you, knew nothing. So anyway, so that's kind of how it all started, right? And so then, almost 30 years ago, I started Work Comp Solutions, where I said, look, I get this workers' comp stuff. I've got it down pretty good. Because I've looked at, when you look at the same thing over and over again, well, you get kind of good at it. You have to be that smart. You can just go, look, I've seen that problem before. I've seen this once before 10 years ago, or I see this consistently with problems. So it was easy for me at that point to go. So now only work. And by the way, back then when I did it, the rates were still high, right? And they'd still go up. So, I mean, as the rates are going up, I'm like the rooster taking credit for the sun coming up. I really didn't do anything, but I'm getting a raise, right?
So you had to prove that you could find some recovery in order to get the AOR? Is that right? Okay.
Yep. So, but sometimes it wasn't only that. And back then it was more like that. But today as an agent, I can start with that. But look, I ask a lot of questions when I meet somebody the first time. So, and it literally might be just we're quoting the liability because we're now doing all other lines of coverage. But now it's the quality of the questions that I'm asking people, because they're the questions I ask, nobody's asking these questions. I talk about EBITDA. Nobody else is talking about that.
Right.
I talk about it because I got a good story to talk about. And so, and plus, yeah, I think I've made it. I mean, I'm not going to really talk about it, but last year, Work Comp Central, if you're in the insurance business, you're probably a member of Work Comp Central. So you can be a plaintiff attorney and be a member of it. You can be an orthopedic surgeon doing work comp claims. I was named the #1 work comp broker in the country last year. And as I told them, I go, if you'd have waited any longer, it would have been the posthumous award. You know, it's about time somebody saw me. I'm not going to be around much longer, right, Eric? So anyway, so that's kind of how that whole thing began, you know, years ago. That's how I got started. Then I started specializing just in workers' comp. And I used those tools. Now, I wasn't really doing much premium recovery. I was just 85% of our business is AOR, right? So all I got to do is see something, bring it up. And because if you AOR it to me, I may waive getting half the money, right? If you're not going to give it to me and I'm just going to fix it, you're giving me half the recovery because my contract's 50%. So with all that being said, I started building the book and based on, you know, and I always talk about, because I just said I'm not analytical. I take AORs because I'm lazy, because I don't want to have to do the court apps and the paperwork that comes with all that stuff. So that's where it all began. So it kind of bled into the last 10 years, right? Workers' comp rates in Florida, if you're not from Florida, I will tell you they've dropped about 73% in 20 years. So you can imagine your book of business dropping, say, 75%. I mean, it's hard to outrun that in sales, right? Because this year, in Florida, we had a 15.1% average rate rollback. That was average. Contractors all got 20. And our book is heavy because I like contractors.
Yes.
And that's always what I've liked. And the reason I've always liked it, because their rates were always high. You know, manufacturing, you're not going to see it. You know what I mean? Any of those there's a lot of other industries, you're just not going to see that kind of rate. So you don't have, you know, if it was a call center, I need, you know, somebody with 1,000 employees to generate the same premium as a roofer with 30 employees.
Yeah, it's like you're on a treadmill. So then you introduce this premium recovery model, and then can you kind of explain about, really, for those that don't really know the details like me, recovery, that like, what does it really entail, you know, specifically in the area? And it's only for workers' comp at the moment that you do it for.
Yeah, that's fine. Yeah. So when you say, what does it entail? It's the start of a conversation. So you said you're going to have young producers on here wanting to get in the door. You got producers that were bought by these private equity guys that are under a tremendous amount of pressure to produce. And you're not getting the attention in some of these states where the rates are depressed, like Florida. By the way, most states are having rate rollbacks.
Yeah, even California is now. Yeah.
Everybody. Yeah. So Georgia, you've seen that in Georgia too.
Yeah.
So how are you getting in the door? So people will tell me, like us, it's all referrals, right? Probably you too. You know, you're not picking up the phone and, you know, the Gordon Gekko, here's your lead list, and they give you a phone book, right?
Right.
You got to find a way to get in. And everything in life is a point of comparison. But let's start with that. So Mr. Insurance Agent or Mrs. Insurance Agent or Miss Insurance Agent, when you go in the door and say, we have a special program for plumbing contractors, you know what the plumbing contractors looking at you saying? Yeah, the last 5 agents said they had a specialty program too. And nobody beat the price I have right now. So you get compared to the last 5 people that maybe have exaggerated. And now you're getting put, you know, you're compared to everybody. You're not getting in the door. But what if you say, you come in and go, look, here's what I'm going to do. I don't care about your agent. I don't care. Let me just look. I can go back 3 years, current plus 2 or 3 years. And if I get you money back, we're going to work on a shared savings agreement. Is there any reason you would tell me no to that? If I tell you, Every vendor that's coming to see you, Mr. Plumber, is taking money. The Kohler guy that's you're selling, buying the toilets. Everybody's taking. Who says I'm going to audit everything and bring you money back? No, I know. I say this, close your eyes and what do you see? Nothing. That's because nobody's doing. So what it has, they can't put me in a box, right? You can't force me into something. So with that being said, that's how it starts. So it starts with that kind of process. But now they agree. And so I'm going to give you a couple steps in this. Is that fine, Eric, or do you want to go to another question?
No, please.
Okay. So the steps are, somebody goes, yeah, let's do it. So what I do is, of course, I like to walk the property and see what people are doing, right? If they're manufacturing, if they're construction, I want to see exactly then I want to look at I go back 3 years. I get 3 years worth of audits. I order 5 years worth of experience mod worksheets because there's old data that moves forward. You understand that. So I order audit worksheets and mod worksheets. And I do a deep dive into what they do. Because somebody can tell me, I'm a steel fab shop. This is my most recent recovery of $60,000. And so when I'm looking at this guy's website, this company's been around for a long time. He's in that 3030 code, I think is right? So he's in that steel manufacturing code. And if you look from the outside looking in, and all the auditors, by the way, and loss control people, they all say, yeah, this is steel. He was manufacturing conveyor systems. There's an agricultural code for that, which is about 60%. It is 60% less than steel fabrication.
Nice.
So what I did is I'm looking at this and I'm seeing, and I'm looking everywhere, right? So I'm looking at websites. If they have a business Facebook, I'm looking at everything. I'm asking them who his customers are. What are you making for these people? So the more and more I figure out, this is exactly what this guy does. Exactly what he does. So this one didn't take me very long after I figured it out. But by the way, I had him sign, we call it a shared savings agreement. And so, Eric, mine is down to one page, edited down to one page, because my first premium recovery contract was done by a lawyer. It was 6 pages long.
Too long.
And I'm going to tell you what, I never got it signed half the time, or when it was, they were editing all this stuff out. So I just decided mine looks more like a handshake. And all it says is, if you get money back or credit back, and so my contract's and if you save money the next 12 months because what I've done, right? Because sometimes I'll fix a mod today that's not effective until 1/1/25. Well, and I lowered it 10 points, right? So yes. If I say, whatever it saves you, I want to be paid for that, right? So I have those contracts that, you get money back or for the next 12 months. That whatever I've saved you on that mod, now it takes longer to collect that, right? Because they have to go through the entire 2025 to see what the premium audit's out and the mod impact on that. So I've got to wait on my money. Sometimes I'll negotiate it down just to take it now instead of waiting. But it gives you a lot of opportunity. But the fact is, I go back to this. Who is doing that? And you keep beating your head against a rock, with referrals, because every time I have a center of influence and I say, see if you can get me into this account. You know what? 99% of the time, they go, Duke, they like their guy or their gal. They like them. You know why they like them? It's not because they're great. Because today, good is good enough. That's all they say. Good is good enough. And as an agent, if you tell me why you're successful or your organization is because you have good prices and good service, you're a dinosaur. And you just don't know it yet. You'll be dust before you know it. You've got to be a lot more innovative and a lot more creative to get business today. Yeah, can you get the small stuff? Oh yeah, you can run that small stuff all day. Good luck.
Yeah, can't make any money,
You
unfortunately.
you cannot make any money. You'll work your butt off for it.
Good for new producers, I guess, to bite their teeth and cut their teeth on it. But you know,
Eric, that's a good one. And you tell them, burn yourself out, you know, working 12-hour days on that stuff, because you're going to get really good at it and really good on that plumber that now the next one that rolls around that it's going to be, you know, $500,000 in premium. Now you got it because you're looking at that and finding that niche, right? So that's where, you know, as I talk about, as I get in, but like I said, I do a ton of research, all social media. I look at, in Florida, I look at the Department of Professional Regulation and Corporations, and I look up the person's name too, because I want to see what companies he's got, right? So I look up everything I can find. And there's times, but most of the time when I'm meeting a prospect on LinkedIn, there's an add-on that you could get called Crystal Knows. And that knows is KNOWS. And what it does is if I'm going to have a meeting with you and you're a prospect of mine, because everybody's got a different personality, right?
yes.
So if you're a high S and a high C, analytical, detail oriented, and I walk in the door, you're going to go, I'm not interested, Duke. I'm sick of your stories. You bore me. You know, it's that stuff. I want everything in a bullet point. So what this does is, what Crystal knows is, it takes my personality and it compares it to my prospects. So and it shows, they're optimistic, they're skeptical. I'm very, very skeptical, by the way. And so all of that stuff, it tells me how to communicate. It's a good website for agents to look at. But it tells me, and I've got success stories on both sides, where I went in, somebody was just like me. 10 minutes in, you know, the owner's going, man, I felt like I've known you for 20 years, you know?
Yeah.
You know, these are the guys that we sit in a bar talking. We can't execute an idea, but we can sit in a bar and punch each other going, yeah, let's go, baby. That's a good idea. Then when it comes to execution, it's a little more difficult. I need help with execution.
I know, yeah, I've got a colleague like that. We joke at the end. It's like, we're going to talk about these phenomenal concepts for like 1 hour in a bar, and we're not going to do anything about it once we leave here.
That's
And it's
exactly
really
right.
sounding great. Hey, everybody, it's Eric. I just want to pop in for a quick announcement. Exciting news. I just launched my new book on Amazon. It's called The Blueprint, an insurance agency's unconventional rise to the top. And it goes through a little bit about how I built the agency Insured Solutions since 2009 to today. And the blueprint in terms of how I actually did it with the tech stack, the offshore, nearshore talent, and digital marketing techniques that I use. So pick up a copy today on Amazon. Thanks, guys. So back over then to the process. So then you get them, let's just say you get them to agree. Do you do any research before you even meet with them to know you might have a possibility? And what's the minimum premium that you like to focus on also?
Well, usually you know, I prefer it to be over 100,000 in premium. But it's not just the premium, it will be the complexity, right? So when I look at it, so I can pull up their experience mod, right? So when I'm talking to somebody, so if they've got a 0.65 experience mod, okay, I don't think there's a lot of room there, right? Yeah. But if they got a 1.65, now I've got, so it's a combination of all of these factors that
higher mod, 6-figure premiums, and then
more than one class. I need a lot. I like a lot of class codes, right? So that's why I like construction. So if you have a GC that self-performs, so now he's got probably 10 class codes because he may have dump truck drivers, framing contractors. He's got them all, right? So he's got all of that. I like to know if you owed money on an audit. So I get all the old audit worksheets. So I go through all those audit worksheets and look for misclassifications, or I look for mistakes, you know? So I look, you know, all of that stuff I kind of pile together. And usually what I do, like if I'm meeting with a prospect the first time, before I even give them a contract to sign, I'll take a look first I'll just kind of look at it and say, let me look at it and see if I can see if there's any light. You know, if I can find a little bit of, and if I go look, I think I can find some stuff.
Okay, so you'll always kind of get the info and to do a preliminary review
Yeah,
before
right.
you engage, because you don't want to waste your time or theirs, really.
But the other side is I'm in the door. So it's the old thing about, you know, peeking inside the emperor's cloak. I get to see what the other guy did. And I ask for everything. GL, auto, umbrella. I ask for all of it, right? So now I've got all of this information. So I've got the audits on all those other sides. But so now if there's not much money, there may be an opportunity to get everything, right? Just based on what we do compared to what the competition's doing.
But you're not reviewing those other policies for premium recovery.
I am.
You are? Okay.
Here's what I'm doing on those. So I'm looking for premium recovery, but more importantly, I'm doing a gap analysis.
Yep.
So I'm looking for gaps in coverage. And then, so when I sit back down with them, I just did one for somebody and I didn't give it to them. Because when they told me that they've been with the same agent, they're a remodeling company and they're in Orlando, and their agent has a bunch of residential properties and they do all the stuff for their agent. So he's a customer, right? So as I'm reading this stuff, and I'm telling you, talk about gaps in coverage, meaning if you're working in a condo and you're over 5 floors high, no coverage.
Whoa.
And I can tell you, downtown Orlando, if you drive through there, there's a lot of big, you know, 40, 50-story condos downtown. Mm-hmm. So I'm reading, and they're writing, right? So I will use that to kind of see where it stands. And so, yeah, I'll do the gap analysis, but all of it just gets me deeper involved. So like I said, this is a pretty good size remodeling contractor with 100 employees. Here's how good they are. Here's how dedicated they are. They pay 95% of the employees' health insurance. You don't see that.
Yeah, yeah.
So they've got it, and their guys are making good money by the hour. It's been around for a while too. So anyway, so with all of that, I look at all of that stuff.
So on that particular one, were you able to find premium recovery and gaps and then got everything, or?
Here's what I did. I put them on ice because it's funny that you said that, because I got an email from them yesterday and they go, all of our stuff's coming up for renewal in 88 days. But when I was there, I asked them the question, I go, what's the likelihood of you leaving your agent who you've had forever, who's also a customer? And you see what I'm doing, folding my arms? I'm just giving you the body language. That's what they did. And when I saw their arms fold like this, you know, it's like, well, if you save us a lot of money, and not going to do it, right? I'm not going to go bust my hump on that when the other agent is going to see all my work.
Right. Incumbents win what, in 90+% of the time or something?
Yeah. So what I'm done. So the guy emailed me this morning and I shot him an email, told him I had a couple podcasts this afternoon and I'd call him later. But I'm just going to say, you know, this is what you said to me. And that's what I would say to an agent. Ask them. I mean, everybody's has got a number. Like if you said you wanted to write my homeowner's insurance, I've been with my buddy from high school, State Farm guy, for years. So are you going to get it by saving me $500? No. Now, if you come to me and you analyze all my stuff and you go, did you know, Duke, that this? Did you know? And that's what pisses people off when they're not aware of something, right? They didn't know that their deductible was changed a year ago from a $10,000 occurrence deductible to a $10,000 per claim deductible. Now, this is a client that I've had for 30 years on the workers' comp, industrial painter, sandblaster. And about 3 or 4 years ago, I just happened to remember. So now we're quoting the package, right? But I remember they oversprayed 300 cars in downtown Orlando. So back then, they were a per occurrence. So the last year, they changed agents because the agent came in and saved them a bunch of money, but never told them where the changes were. And were you aware that if this happened, so that's when we do those gap analysis, we're talking about premium recovery, but I'm just saying as an agent, you got to start reading policies. Carriers are taking coverages away every day and you don't know it. And you feel the pressure of you got to sell something so bad that you got to get some, you're doing an injustice to yourself and to the industry when you start doing that.
True. So back in this case, I love these case studies, that you're speaking of. So in this scenario, he said he won't change agents. So you know about time wasting here. And then did it look likely you could possibly get any recovery for him, or are you just going to cover the gaps?
Yeah, no. There is probably some premium recovery on it. And the reason is, and this is one of these case studies, I just haven't been pushing it on the workers' comp. So there are there's more than two, but carpentry codes, right? So there's a framing carpentry code and there's a cabinet shop code. And so on their work comp policy, they have everybody in the framing code because that's what the carrier told them. They have nobody in the finish work. That's the cabinetry stuff. Now, if they have the framing guy and the cabinetry guy on the same project, they all have to be class coded the same. But like I asked them, is there ever a time when you just go in and you're redoing a kitchen, putting cabinets in, and they go, yeah. Right. If the price is half, premium is half. So like I said, I was talking about this manufacturer with the conveyor systems. Their premium was $100,000 a year. It's now 40 grand a year.
Nice.
So, but it takes
back to the other one. Sorry to stay on this, but so they're probably not going to change agents, but you're going to go through the gap. How are you going to get them to make the change? You think you're going to talk about the gaps and the premium recovery, right? It's going
to be both. But I got to tell you, Eric, when I left that meeting, my gut told me move on. My gut, because are they going to fire a 30-year agent who sends them business and they take care of this agency owner owns a bunch of rental properties all over the place. Are they going to fire him? What I saw it is they're going to leak the information to him. And he's going to go, let me see if I can fix it for you guys. I wasn't aware of it. And this is literally where the son's handling it. I'm going to get on his ass and we're going to get this thing straight. But he's going to save it. It's big. I mean, the total premium, including the work comp, was about 600, 650, including everything. So it's a good enough size where you can make some money if you write it. We're a small company. And so I'm looking for low fruit. I can find another $600,000 deal that quick.
Right. So will you still let him know about the gaps or specifically?
No, look, my list of gaps, it was, and I probably gave them 8 of the list, but they were the 8 that turned their stomachs. So.
So you've already done that?
What's that?
Have you already done that with this particular account?
Yeah. That was my first meeting with them. That was to get myself in the door. That was the wedge, right? And then they're now telling me because then I start asking about their agent and look, this is a business deal, right? I want to make sure it's a transparent business deal. Not that because I don't believe they're telling me everything. And you have to have that happen to you a few times in your career. In fact, a lot, because you keep thinking this one's different. My gut tells me I'm wasting time. So I'll be getting this guy back on the phone. And he's like the COO. He's not the owner. Owner didn't sit through the meeting. That was another red flag.
That have all the decision makers.
Yep. In
So
there.
what's
So
what's
he,
your play? Like get a meet, say that you're not going to move forward unless you get the meeting with the owner and commitment of AOR, or like how,
so the next call, by the way, won't be a call. I do everything Zoom. And I would highly recommend to every agent out there, you Zoom every call. You don't do it on the phone. Because I can look at Eric and tell that he is staying engaged with me. I can look at the body language on somebody. I can see their arms cross. I can see how they get uncomfortable. And I'm going to go ahead and press them. But I'm going to get that call done because I still have, 3 months to go on the renewal. So I may change my mind on this. But as we come up on 1/1, most people are really, really busy on 1/1 like we are. So anyway,
so what are you thinking then? What's your you gonna give them like a kind of a semi ultimatum of like
yeah,
I need to handle everything in order to continue?
no. It is that, and there's no guarantee, but I go, look, let me just tell you what I'm thinking about for this. So there is a captive for remodeling companies. There's a specialized captive. They don't do the liability, but they do everything else. They don't want the liability, as you can imagine, right? With class action lawsuits and all that affecting every member. So there is a captive out there for that, and they would fit into it perfectly. So I think I'm going to lead in with that, but I have questions before that. So what the question I would have is, how long is the owner planning on staying in the business, right?
Yeah, to be in a captive, yeah.
Yeah, because it's a long-term play. But anyway, so let me give you some other stuff. I know you sent me some questions.
We drifted off a little bit on this case study.
Yeah,
But yeah,
I
so
know.
I think one area would be kind of like when you're going through the process. Let's stay with the premium recovery now. You talked about how you identify it, like in terms of what's going to be the best fit for you, a best target, and then we talked about, how do you collaborate with insurers once you identify things? How does that work?
Yeah. So here's one thing I don't do. I don't ride in like I'm the on a white horse, like the white knight saving the day, right? I am, if there's a mistake, now you got to realize that if there's a mistake somewhere, I'm asking this carrier to give this company back whatever. And then the next day, I'm asking this carrier to place a piece of business for me that may be hard to place. So
That's a tightrope. Yeah.
it is a tightrope, but you know what it is? If you establish yourself as an agent, that you have credibility, because these people remember, if you lie one time, you've been in the business long enough, everybody, now you're a liar, right? So, and nobody's going to do you any favors. So so when I start looking at this stuff, look, I'm not fighting over trying to change something that should not be changed. I'm not trying to say a welder is a clerical person, but I'm saying that there are 3 people that are executive supervisors, and they're in that rate, 5606 rate, and you have them classified as a welder, and they ought to be paying, 80 cents per 100, instead of $13 per 100. And what I do is I make sure I get a job description of these guys. I talk with the owners, and I make sure they understand. And so as long as we're clear on it, there's no at an audit, because I attend audits too for our own clients and the complicated ones, not something that's not complicated, but it is. So I'm just making sure the audit. So it does a couple of things. One is I now know almost every auditor out there, right, with my clients. And so, but I don't say anything. And when a client, sometimes, especially a new client, first year, because I'll make some changes typically the first year that I get them, if I find some mistakes. And when the auditor's asking the client a question, they go to look at me for the answer. I go, just answer them. You got it. You don't need me to tell that answer. Because they feel uncomfortable. But I want to share some other examples too, right? Okay. When you talk about premium recovery. So about 3 years ago, there's a PEO out there called Invo. So to give you a little background, it's Bill Arrowwood that owns three PEOs: Madison, Invo, and Mutual. Those three PEOs. Him and his brother also owned Appalachian Underwriters, which a lot of agents know who they were, and they sold out to, I think they sold to Acrisure like 3 years ago. Yep. So they cashed out pretty big. So I'm good friends with Bill Arrowwood. And probably 4 years ago, he said, can you look at Invo? Now, Invo's premium it's a lot, right? And we ended up, it took us 1.5 years, close to 2 years. Their experience mod worksheet's 225 pages. So you can imagine me looking at that thing, like, because I'm not detail oriented, I'd look at all those pages, I go, it looks good to me. But I'd give it to somebody in the office. We got them $700,000 back.
That's a big one.
So same year, we got a refrigeration contractor, $300,000 back. So we had a good year that year.
Wow.
And so it's out there, right? So here's another interesting one, because I'll share some different examples. So up in Myrtle Beach, I get a call from the CFO, and he says, can you look at our workers' comp? So they were timeshare, and one of them had opened, and then they bought 2 other timeshares, right? So now you got 3 timeshares operating almost kind of independently, right? So each one of them had their own work comp carrier, had 3 different agents. So I asked the CFO, I go, are all these owned by the same person? Same? He goes, yeah. So I got all the data. Now here were the mods. One of them had a 162 mod. One of them had a 1 mod, and the other had a 1.20 mod. Those 3. So I took all the data, combined it together. So if you were to guess, Eric, what would you think the mod would be? 162, 120, 1.
135.
That's what most people think. 101. Because it's the way the data gets stacked. So
right,
you push all that stuff.
The ratios, right?
Exactly. That's an expected loss ratio versus the claims. 101 mod. The day I did it, if I would get, and I did not have this client, by the way. It was a prospect, and the CFO, it dropped their premium 156,000 using that 1 mod between. And I'm thinking to myself, there's 3 agents that are operating. Did not one of those boneheads think about they're already in there. They know there's other companies, and not one of them said maybe we should. So when I did that, everything got AOR'd to me.
Nice.
And so it was, it's a good size deal for us. It's even way bigger now. They just bought 80 Marriott timeshares to fold into their portfolio.
Makes sense. One other thing I thought of while you were telling me that story would be when you're first going into a prospect, and you go ahead and know this is a good potential fit for premium recovery. Are you getting into and you get them to sort of bite on that idea that allow you to handle it, and so that's your entree? Do you immediately go into an insurance conversation as well that you do with these things, or do you sort of push that back? Focus on premium recovery.
Because I don't want to. I want to stay there, because what I have to build is trust and credibility.
Right.
And just because you get that letter of authority signed, that's the first thing we do, get a letter of authority. So I can now, because I have a letter of authority, I can get all the mod worksheets, and I'll pay for it. Yeah, so whatever they cost, and they're $30 a piece. So I'll get all of that. So, but I've got to build that trust moving forward before as I start working through it.
P&C agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insured Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's $125,000 maximum premium. And some of the tough industries they write are construction, transportation, that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insurancesolutions.net, click the Get Appointed link. We'll get you logins for you and your team and can set up a webinar for training if you'd like. Also, feel free to email info@insurancesolutions.net and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. So what objection would a client have, a prospect have, when you offer premium recovery? Do they think that their agent's doing it, or what's their objection?
Sometimes. Yep. Sometimes they say, yeah, my agent's taking care of it. The biggest pushback I ever have is where a business owner will reach out to the agent and the agent goes, oh, we're doing that for you already. No, you're not. I know.
How do you dispute it though?
I don't. I let it go. I don't. Yeah. Look, if I ask, I go, well, then ask him to send you, because if all your data was filed 6 months prior to your anniversary date, tell him to send you the info that he's already pulled it. The email where he's pulling those stat cards were filed. So we look at that, right? We know that's all this data is getting filed at a certain date. And is your agent looking at these claims prior to the filings? If they are, but there's times I can look at the mod worksheets and the claims to see when they were closed versus how they were filed on the mod worksheet. So that's the same thing I do. And so we look at that up, and I'm going to run through a couple more examples for you too, just because the diversity of what we find. So I ordered 2 NCCI audits because the carriers are telling me to go blow smoke. Yeah, we're not doing this. So one of them was a janitorial contractor, right? I took him out of a PEO. They got 65 employees, and I classified them as janitorial because they'll go to a job site like these big drag lines and these phosphate pits. Before the painting contractor comes in, they go in first and they clean all the oil and hydraulic fluid, all that, clean it up. So when the guys come in, they can sandblast it and paint it, right? And other things like these big mixers, they clean all that stuff. So a carrier changed them to the painting code, which for them, it's about 40,000 higher between the janitorial and the painting code. And they said, because they are a dedicated sub to this painting contractor, they should be painting. And I'm going, no. Now, one thing I will tell you, when you order NCCI, it's like a jury trial. You better know you're right, period, in the story. And so I brought NCCI in on this one. And I remember my client saying, well, what happens if it gets worse? I go, it can't. This is as bad as it's going to get for you, right?
Okay. Yeah.
So that was kind of the deal. So last Thursday or Friday, I got the report back from NCCI, which it was done about 3 weeks ago. So we got it done. The refrigeration contractor I just talked about, they're down in Riviera Beach, down there in Delray. He was classified under the AC code in his refrigeration. Now, if you look at you read the scope on the AC code, it says it includes refrigeration, if connected to the AC system. So if the refrigeration units are connected to, then it's all in the higher code, AC work. That might have been done 100 years ago, but Publix is not hooking up their refrigeration where the ice cream is to their AC, because if the AC goes out, you got melted ice cream, right? Yeah. They're their own units now. They're pretty much all of them are self-sustaining. And the agent pushed back. The carrier pushed back. No. So I'm telling the guy, the owner, let's bring them in. So we brought in NCCI, and I would say attend the NC. You're going to learn. So you want to attend those meetings. You want to attend audits because you're going to learn more. I'm not an expert. I'm not an expert on loss control, but I'll attend those meetings because I learn more. That's what makes me really good, is hearing these people talk, and I can ask them questions about what they look for or auditors. So you keep taking that deeper dive, trust me, your competition's not doing it.
I love it. I love it. So hey, Duke, sorry to cut it short. We're running short on time, but before we leave though, I want to make sure if people have questions, obviously they can call me 770-402-5343, info@insurancesolutions.net, and I'll get back to you. But also, Duke, how do people reach you if they want to learn a little more?
So they can, I have a website, it's workcompsolutionsfl.com. You can see a lot of the stuff that we do on that. This is a long email address, but you can email me at and it's workcompsolutionsfl.com. Hit me up on LinkedIn. I post a lot of stuff on LinkedIn, a lot of success stories that we connect on LinkedIn, so you can see a lot of the stuff I post.
And you'll revenue share with the agent for this, right?
Oh, absolutely. Look, we'll revenue share. I'll make you look like the hero. So, but anyway,
I know I'm going to start working with you on some of these and get good at it. And then, I want to, help promote the service. So I'll be sending out an email to my database, as we talked about this, to kind of use it again as a wedge to get in, to not talk about insurance specifically in getting the business. I love this as a good entree. It's a great prospecting tool. And it helps the client and as well. So everybody's a winner, really, if it works for them. Yeah.
So you said it perfectly. You want to get in the door, tell somebody you're sitting next to somebody on a plane. If you tell them you're in the insurance business, they're going to close their eyes and take a nap, right?
Yeah, they clam up. They put the earphones back on.
Yeah, exactly. You tell them I've cleared out first class. I tell people I'm a life insurance guy. That really clears out.
Oh yeah, that'll do it.
They'll sit in the back.
That'll get you a whole row. Yeah.
Yeah, but when you say, look, I'm in the premium recovery business, and then you zip it, and they go, what does that mean?
Well, I think we have to do a part 2 for this, because I agree. Some more stories, because I like the story aspect of this and what you do and how you do it. And I appreciate your time, and thanks for coming in and doing this. It's really awesome.
Good job, man. I was excited about hooking up with you.
Awesome.
So I've watched a lot of your videos, man. You guys do a good job.
I appreciate it. So again, I'll talk to you soon. Thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.